What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is January 5th of 2021. Well, folks, I hope you all are having a fantastic day wherever you are. And in today's video, we're not only going to spend some time to take a look over the market, but talk about probably one of the biggest events when it comes to the further development and acceptance of cryptocurrencies throughout the traditional financial system that really could bolster a lot of adoption in this space and a lot of new liquidity coming into cryptocurrency markets. Surprisingly enough, it's the news headline that probably wouldn't catch your attention. So we're going to be talking about all this and more as we go through the video. Let's go ahead and dive straight into it. There's a lot of major headlines, big news stories coming out here, but across the board of the market, we can see that the vast majority of altcoins are in the green. We've got a lot of plays pressing up on the upper end of single-digit territory between 5 to 9%, and we've also got a lot of cryptocurrencies pressing double-digit gains for the day, with few players down the red, mostly stable coins, as people are exiting that stability in the sense of liquidity, and they're going towards a lot of different cryptocurrencies in the market, increasing risk, building positions. So this is a really good dynamic here. It's showcasing, and as we see, bear in mind, Bitcoin only registering around 1 to 2% gains here and starting to set in those lower highs, as we'll take a look at in a moment. In this case, this is showcasing that, again, we're starting to see the circulation, the change in trend here. Same exact things we saw back during the summer when we started to have the miniature run-up we had in altcoins throughout the summer. So again, let's go ahead and talk about that here, right? Again, because I'm not per se bearish on Bitcoin in the long run. You guys know I've got very large price targets here. But the thing I kept emphasizing is that as we approach 30,000, we're getting into overextended territory. We are far beyond the means of what we've seen in previous cycles. And what we've noticed here is that ever since we've started to set in these lower highs here for Bitcoin, this has really started to amplify and solidify the gains in altcoin dominance, especially predominantly in the second largest cryptocurrency, which is Ethereum. And we talked yesterday about this general line of resistance here that have been formulated by the two tops, and now it seems like it is weighing down price here. So again, I don't think that this is going to lead to some massive sell-off, not at the pace here what we saw back when we had this large volume candle, especially these last couple of hours here back a couple days ago, where things were really starting to pull back on the 4th. And now I think what we're really going to get here is just a kind of a slow but steady cool down to some kind of range of support. What is that range going to be? I don't know. It could be something big and even like 25,000. It could be something, around that range. I think that would be a pretty conservative estimate overall. Besides, that's a point where we had some resistance here, or maybe down here at 24,000 as well. Again, any of these kind of price ranges where you saw Bitcoin treating price as resistance would be something you'd want to watch for as a potential support range. And the good news is that's a great place for us to focus in on averaging in if we think that that's a good point to buy. Looking for any kind of discounts in the market and building our positions. But I think that this is a time where altcoins are going to start to regain dominance and possibly even charter up at higher USD territory, as Bitcoin might be slowly but steadily pulling back, and then giving Bitcoin that room to eventually run up again whenever it may be the time. Now, I want to take a look here at Ethereum. Again, holding practically all of its gains here, except some of the extended portions here. We can take a look here at the hourly just to get a better picture. We started to continue maintaining in higher lows here, and now it almost looks like we're kind of building in a wedge here. We've got the slightly lower highs, slightly higher lows, building in a coiling of that price and seeing whether or not Ethereum is either going to A, be able to hold, or B, break out here. So that's a really important thing to see here, whether or not we'll even be able to hold this range. If we start to pull back, that might be a cause for concern, but I would like to see this just continue carrying forward, because if ETH doesn't show signs of strength here, if it doesn't hold on this range here above this this price range here, right, where we had resistance in the past, we also have resistance here and here. This is kind of an ultimatum moment here where ETH has to pop up here and really set in a significant higher low. That's going to give us the kind of confidence that altcoins can start to really see some massive gains here over the next few weeks, even though they've already started doing a lot better than before. Altcoin dominance, again, dependent on what ETH is going to do. We know that we can't rely on XRP or any of the larger cryptocurrencies here. ETH is going to be the one that carries it forward. And again, I'm wanting to see us at least hold here, because at this range here, around 31 points, this was the last critical support level back here. So if we can continue to climb up and set a higher low, right, that would give us a lot of signs of confidence here that we're starting to charter back and reverse the trend here, right? Just taking a look at the daily, you can kind of see how the trend is starting to reverse here. We got the rebound here. It's a matter of setting that higher low and continuing that cycle upwards. Now, I want to go ahead. We've done enough looking at the market here, and I want to go ahead and talk about the headlines today. I usually don't really care about what the headlines have to say because there is a lot of noise, But there is something extremely important that has come out over the last couple of hours, really over the last 24 hours. Came out last night. So this is one of the largest federal regulators when it comes to banks, managing savings accounts, financial products and services. They help manage and basically regulate over $14 trillion of deposits through commercial bank branches throughout the United States. And this is a specific regulator here that is coming out and stating support for banks utilizing distributed ledger technology or stablecoins. It's what's known as the OCC or the Office, and this is where some people debate on the pronunciation. It looks like it's spelled comptroller in this case with the P, but some people pronounce it the Office of the Controller of the Currency. So no matter how you want to pronounce it, we're not really here to debate that or get caught up on that. I'd love to know in the comments down below what you guys think. But the major thing I want to emphasize here is that back yesterday, they basically stated that banks can utilize stablecoins and networks that utilize distributed ledger technology, aka basically blockchains in this case. Now, what does this mean here? Because I think a lot of people, in crypto were like, look, I'm not worried about per se stablecoins in this case. I'm worried about banks regulating or regulators cutting out or regulating the use of Bitcoin. That's what I'm concerned about. Or maybe altcoins or cryptocurrencies that might be similar to XRP. Isn't this what you're worried about, Nick? And yeah, of course, all those things are definitely concerns. I bet there are some cryptocurrencies that fall in line with the SEC's definition of securities like XRP. But really, on a kind of global scale here, why this is really big news and why I've always emphasized the importance of stablecoins is because they can serve as a fantastic on-ramp into the world of cryptocurrencies. One thing that I always emphasize when it comes to Digifox, for example, is that we utilize our different fiat on-ramp partners across the globe who have proper, money transmitter licenses, who are completely regulated, and help people transition from, basically fiat currencies of some sort, depending on what country they're from or where their bank is, into a stable coin. Right? We usually predominantly use something like USDC. And this is really fascinating because once you're in USDC inside your wallet, you are an autonomous agent. You can go out and buy the cryptocurrencies you want through the DeFi space. You can go out there and earn the interest rates you deserve to earn on your money. That's a big reason why I had the focus on building Digifox this whole time. And just seeing now that the OCC has basically solidified that banks can now play a part in this world of stablecoins and distributed ledger technology is absolutely fascinating. It showcases that the pendulum of technological innovation is happening. The incentives of embracing this technology have outpaced the negatives of going against it. So this is really exciting, and I have no doubt you're going to see some major commercial banks take upon this because the OCC, mind you, in this case, is one of the largest regulators when it comes to banks in this case. Again, managing over $14.1 trillion of bank assets. That's the total, kind of value under the umbrella of banks that work with the OCC. And again, if you want to go ahead, you can actually read the letter from the OCC here that talks a little bit about the details of what this means, but most of it is said right here. Introductory and summary conclusion. This letter addresses the legal permissibility of certain payment-related activities that involve the use of new technologies, including the use of independent node verification networks, INVNs or networks, and stablecoins to engage in and facilitate activities. National banks and federal savings associations, collectively referred to as banks, may use new technologies, including INVNs and related stablecoins, to perform bank permissible functions, such as, in this case, payment activities. This is really huge, guys, because this has massive ramifications for replacing SWIFT. It has major ramifications for allowing users of commercial banks to access higher interest rate markets. I think that this is something that commercial banks are going to have to do to compete against smart wallets like Digifox and Celsius and BlockFi and all these providers out there. They're really going to have to step their game up, and USDC is a direct tool where they can offer that to the smarter, more kind of fintech savvy consumers. And one thing we wrote about, we actually talked about this to a degree back a couple months ago in the Dash report, the overexpansion here of stablecoins, the absolute need to kind of democratize dollar liquidity and allow it to flow wherever it needs to within the DeFi ecosystem. Take a look at the last couple of months here. Ever since back in March of 2020 when we had the pandemic, when we had the global recession, interestingly enough, we have had a massive multiple on the growth of stablecoins, not in the sense of price growth, but in the sense of overall supply that's available on the market between Tether, USDC, DAI, all these different stablecoins out there on the market. And it's really, really exciting to see that we're getting this kind of growth. Even on a logarithmic chart, we can start to see here that I think very clearly we're just getting started on this. I think we are going to hit a growth spurt very similar to this. I would tell people not to sit on this, to not rest on it, because we are going to see an explosive amount of liquidity want to get into the crypto space as we continue to climb higher and higher when it comes to valuations. And it can be a great on-ramp for buying Bitcoin. It can be a great on-ramp for buying a variety of different cryptocurrencies like Ethereum and ERC20 tokens. This is not going to stop. I can tell you that, guys. So anyways, very, very exciting stuff here. Now, next up, JP Morgan finally coming out with a prediction here for Bitcoin, claiming that it could rise over $146,000 to $146,000 in the long term. Now, again, if we read through here, you can get some more details here in the article about what the call is going around. This is basically the quote here. A crowding out of gold as an alternative currency implies big upside for Bitcoin over the long term. Strategist led by Nicholas. I'm not even going to try to pronounce the last name, but I like his name. I like his first name, even though it's improperly spelled. Wrote in a note on Monday, Bitcoin's current market capitalization around $575 billion would have to rise 4.6 times for a theoretical Bitcoin price of $146,000 to match the total private sector investment in gold via exchange traded funds or bars and coins. So what they're comparing here, again, is this not only the similarity to gold, right? And I think that this is actually it's a fair, decent comparison because I think Bitcoin does make a better gold, in my opinion. It just doesn't have the time record and history of what gold has, though there are some benefits to both. But the other thing here as well is they're focusing on more of like the traditional private sector investment of Bitcoin. And I'll be honest, I think that that's even conservative to think that Bitcoin won't reach to that kind of capacity in the long term, like the really far future. I think is quite conservative just to say that it's going to consume the amount of the gold market for the private sector. There's also central bank management of gold. There's jewelry, all types of different ways that gold is stored as value. And the total gold market is actually much larger. Right now, with current valuations, as it's bumped up a bit recently, it's around $13 to $14 trillion. It might be even more, pressing towards around $15 trillion, depending on the market price. Bitcoin, bear in mind, at $575 billion, 25% of that is lost. So the asset, right, in this case, we're playing it very conservative here, has around $450, $500 billion market cap. Really depends on where you argue how much coins have been lost. So less than $500 billion to keep it simple. And gold sitting around $13, $14, $15 trillion. What asset do you think has the chance to double over the next year? Well, we certainly see gold hasn't done that. I like gold as an asset. I like silver as an asset, but they're not doing what Bitcoin's doing. It's markets to scale, guys. We've talked about this a ton on the channel. And again, it's amazing how large investment firms, I don't think, really get these simple principles. You know, I think the perspective overall is great. It's bullish. But I don't really think it's bullish enough, to be honest, if they're talking about the long term. Again, this is something that I think you could see in this cycle. That's it's actually pretty much in the middle of our ranges of 100K to 200K for just this cycle alone. Now, we've got some news coming out about Bitwise. Many of you know them as one of the major companies that talked about officially projecting the amount of fake volume in the crypto space. However, Bitwise is also an investment management firm. In this case, they have under their management now fivefold from what they had 2 months ago. They broke the big even level of $500 million in AUM. And this, again, bear in mind, Bitwise is a decent-sized crypto company, but it's not even one of the largest out there. This is how insane amounts of liquidity, the kind of insane amounts of liquidity we've been seeing here in the cryptocurrency space over the last few months. And it's just going to continue, guys. Even if we get a pullback in this market, institutional liquidity will come in and they'll start picking up these positions, going into a discount. It's a really exciting time overall. And I think, the critical thing to keep in mind is that we just want to make sure to not get too worried about the short-term price action or too, excited about it, and just focus on doing what we know time and time again has worked for the everyday person that isn't going to make you lose all your money in this case, and that's focusing on averaging in, focusing on those discount opportunities, those market leaders that will outpace Bitcoin in the altcoin space, and continuing to steer course for 2021 and possibly our target range of the fall of 2022, where we're going to be setting our potential peak in for the market. It's a very exciting time, guys. I think I don't have to be the one to tell you that. I think you notice very clearly from the market that we are going through some really exciting times. And even if Bitcoin pulls back, it's not the end of the world. Even if ETH pulls back, it's not the end of the world. We'll see what happens. I think that we are in the right time in this market, and we're at a far lower level than we're going to be in about a year or two from now. So, anyways, guys, that's it for the video. Appreciate you all listening. And if you like this video, drop a like, consider subscribing, hitting the bell icon if you haven't already, and leave a comment as well what you think about all this news. Do you think the news from the OCC is actually really going to have a long-term benefit on cryptocurrencies? I personally do, because I think it's going to be the best on-ramp we have at our disposal until we get different types of investment vehicles like a Bitcoin ETF that is widely accessible for everyday people outside of just GBTC. All right, that's going to be everyone. Thank you all so much for watching, and I'll see you all in the next video. Take care, everyone.